All right, the mortgage numbers just released after a volatile week for interest rates. Diana Olick is here. She's got more on that front. Diana, good morning.
Good morning, Becky. Yeah, and you remember last week when we saw that massive 58% weekly surge in refinance demand. Mortgage demand stalled, though, last week, even though interest rates fell further. The average rate on the 30-year fix for conforming loans dropped to 6.34% from 6.39%, and that's for loans with 20% down. But that's the lowest level since September of last year. But I'll say but. That's a weekly average. And last week was really volatile. Early in the week, before the Federal Reserve cut its rates, mortgage rates, which loosely follow the 10-year, fell to the lowest level in 3 years. But in the days after the Fed cut rates, they shot right back up almost 25 basis points. So refinance demand, which again had spiked higher the week before, it just went up 1% for the week, and it was, though, still 42% higher than the same week a year ago. Now, mortgage applications to buy a home essentially flat, up just 0.3% for the week, up 18% from the same week a year ago. Now, after a huge surge the week before in demand for adjustable rate mortgages, that's ARMs, demand for those riskier loans fell back again last week. So borrowers had been looking really for any type of savings on the monthly payment. Of course, ARM rates are much lower than fixed rate loans.
So I guess part of this is people are thinking the Fed's going to continue to cut rates, and maybe that shows up. Maybe they're pausing on that. But then there's a lot of people who think the 10-year's not going to move anymore because all of those cuts have already been priced in.
I think there are just so many people who are right on the edge of that savings, and that's why you saw so many people go from the fixed rate. Because say you had, high 6s or even 7% on your 30-year, and then you go into an ARM, which is well into the 5% range. If you have a big enough mortgage, you're saving $1,000 a month. That is considerable savings. But when you see those rates start to pack up again, even just 25 basis points, you lose the math. You lose the math on the savings.
And the confidence that rates are going to stay low.
Exactly.